The dominoes have started to fall. Celsius and FTX already down. Is Binance the next to go down?
Good for CZ for being one of the last ones standing, right? But that also just means he's the next domino to fall. Like there's no positive indication that Binance isn't pulling all the same shady tactics that we've seen from all of these centralized crypto players.
In the wake of the collapse of rival FTX, Binance has been struggling to hold onto assets, and investors have been withdrawing their crypto in recent months, despite assurances from CEO Changpeng Zhao that the situation had stabilized. Outflows are accelerating. On January 6, 2023, customers withdrew a total of $360 million. On December 13, Nansen announced that Binance had lost $3 billion in assets in the previous week, accounting for 4% of the company's total at the time. A Forbes investigation, on the other hand, revealed that, in fact, Binance lost 15% of its assets since a Twitter posting by Changpeng Zhao on the same day as he downplayed the Nansen report withdrawals. Nonetheless, nearly a quarter of Binance assets were removed from the exchange in less than 2 months. Remember what happened to FTX when it was experiencing a liquidity crisis, and Bankman-Fried tried to reassure FTX investors that its assets were stable. Do you think Changpeng Zhao is trying to hide the mess, or are we reading too much into it? Let us know what you think in the comment section below. Is there a problem, or everything is fine?
Binance. I don't know if it's the next to fall, but it certainly lost a lot of money. Tell us more about what's going on.
Their balance sheet also has the same red flags where there's a lot of their own tokens on their balance sheet. So the accounting is already fuzzy just from that.
So you think the same thing could happen the way it did with FTX?
Every time a domino falls, it makes it harder for the next domino to stay standing.
The performance of Binance Coin and Binance USD, the two tokens bearing the exchange's name, demonstrates investors' lack of trust. BNB lost 29% of its value during November and December, leaving approximately 29 million tokens at Binance, 51% less than the exchange disclosed on November 10. Meanwhile, the firm's stock of BUSD stablecoins has dropped by 40%. Binance also appears to be losing trust and influence in more subtle ways. While net assets have dropped by 24% since November, investors in well-known tokens such as matic, Ape, and Gala have reduced their holdings on the exchange by 40 to 50%. Despite remaining the largest cryptocurrency exchange by volume, Binance has not escaped the nearly year-long decline in digital assets. Its BNB token is down nearly 37% year-on-year, and the exchange's decision to stop charging fees for spot Bitcoin trading as the market tanked costed about $3 billion in lost revenue per year. According to CoinMarketCap data, the overall value of cryptocurrencies has dropped 56% over the last year to $848.7 billion. Breaking with its habit of not disclosing sensitive financial information, Binance issued a public transparency statement almost in November 2022, listing select crypto holdings. However, Binance did not include $17 billion in BNB-denominated assets, which represented almost a quarter of its total assets.
Binance does not have an auditor. They don't have a CFO, a chief financial officer, not for the last year and a half. And they don't have a norm for, and they operate in a non-physical world. So a lot of information that could be sensitive in nature flies around. So the standards needed, for accounting firms to have, a certification that things are done, that the internal checks of internal controls of the company are in, where they should be, don't exist with Binance.
In February 8, Binance announced that it will temporarily suspend bank transfers in US dollars. The exchange stated in a tweet that no other trading methods would be affected. The announcement came with no explanation. However, Changpeng Zhao stated in a tweet that only 0.01% of the exchange's total users will be affected by the suspension, while assuring that they are looking to resolve the issue as soon as possible. Binance recently ran into financial difficulties in the United States. Signature Bank, its SWIFT transfer partner, announced on January 21 that as of February 1, It would only accept trades from clients with US dollar bank accounts worth more than $100,000. The bank had previously stated that it would severely restrict cryptocurrency deposits. Binance stated at the time that it was looking for a new SWIFT partner and that all SWIFT trades involving other currencies, as well as trading in US dollars using credit or debit cards, would be accepted in the future. Signature Bank's latest move comes after it announced plans in December to sell up to $10 billion in crypto deposits in an effort to reduce its exposure to turbulent market changes. Joe DiPello, the bank's CEO, said, "We are not a cryptocurrency bank. We don't want to be obligated to any particular sector or client." On the other hand, Binance spokesperson said, "We are pausing USD bank transfers as we upgrade our services. We have contacted affected users directly and regret any inconvenience this causes." He also said, "We are actively working to find an alternative solution for SWIFT bank transfers. We have since paused all USD bank transfers as we work to upgrade the service." 0.01% of our average monthly users use US bank transfers. Nansen data shows that notable stablecoin movements include crypto trading group Jump, withdrawing $160 million in stable coins, and Oapital withdrawing $230 million. Andrew Thurman, head of content at Nansen, said Jump and Oapital are large players who routinely sling around large sums, however, and it's difficult to fully attribute the movements to the banking announcement. "I'd say the 7-day outflows might be a little high, but the 24-hour inflows show it's nowhere close to panic."
I think if you lose a quarter of your assets in such a short period, you feel it. And they are trying to show their best poker face, but that the reality is, I mean, they've lost money from Jump Crypto, which is one of the main, reportedly. We don't know the exact amounts, but we know that around the first part of December, they lost in the order of more than 3 billion. They had lost, not 4% of assets as it was initially believed, but more like 9%. So that's where it gets interesting. As we did a little bit of the accounting of how much Binance had lost over the last 2 months, it is alarming. It is something that it is yellow flags, red flags kind of thing.
Following a series of industry scandals throughout 2022, the growing concerns reflect shrinking trust in centralized exchanges. Recent headlines have centered the market's concerns on Binance. On December 12, it was reported that U.S. prosecutors were considering taking aggressive action against Binance and charging several individual executives, including Zhao, with criminal charges. This is in connection with a long-running case involving Binance's compliance with anti-money laundering laws. The investigation began in 2018 and is now public knowledge. In the aftermath of the FTX collapse, Changpeng Zhao has pushed for more transparency, insisting that crypto exchanges present proof of reserves on a blockchain to assure customers that their assets are backed. Binance has presented assets in an on-chain wallet, but many questions remain about how much this actually tells investors. For example, critics point out that Binance's liabilities are opaque. It is impossible to make an informed decision about a company's financial health without a clear accounting of its liabilities. Zhao has commented that it is harder to present liabilities and asserted that Binance does not owe loans to anyone. Despite efforts to increase transparency, Binance continues to operate in an opaque manner when compared to traditional financial entities. Many clients are withdrawing funds from Binance and other exchanges in favor of safer offline crypto storage. Incidents like the USDC withdrawal pause only serve to reinforce this point. While this was done for legitimate reasons and turned out to be nothing alarming, the fact remains that investors must rely on tweets from CEOs on Twitter that are all or above board. Given the painful memories of Bankman-Fried's deception, it's easy to understand the fear, even if there's no evidence that funds aren't safe with Binance. When fear grows and investors begin to withdraw funds, many companies go bankrupt. Please watch the video in the end screen where we explain everything. Before you go, please like and subscribe to the channel for more financial content.